So I've had a pretty good week, I have to say. Pretty good start to the month.
Yeah, me too. But actually, I haven't closed anything right now. The one that I took that we discussed, actually, remember that we were discussing about that FTSE loan, but that was before the elections, I think, or I
Yeah.
don't remember.
Yes,
That
I
that was,
remember.
that was a lucky one.
Yeah, yeah. You still got that one open?
I don't actually. I closed that earlier. I closed that too early. Um, just because I was based on some rules that I have on percentage winners that I had to close on,
Right.
and because of how volatile the markets were, I didn't want to leave too much money on the table on a mean reversal.
Yeah. Yeah.
Yeah,
No, I get it.
yeah. The one that I got right now is a pretty good. Hold on, a pretty good long on the Nasdaq that I took. Uh, right about here. Hold on, let me
Oh,
just
mate,
get.
we can't see your chart yet. There we go.
Can you right now?
Yeah, we got it. We got it.
All right, cool. So let me just get rid of all of this. So I was looking at the Nasdaq, right? Because actually I got some longs right here, but again I closed them prematurely on the election day just because how volatile the market was, and this is the kind of mean reversals that I didn't want to get be part of,
Yeah.
right? So I was looking. I've been looking to get long to buy U.S. equities after that coronavirus vaccine news, right? That pumped the market up. And the funny thing is that both the Nasdaq and the S&P 500 and the Dow, they both made an all-time high, but the Nasdaq did not.
Yeah.
So I was looking at, where would be the correct level to buy into this pullback, right?
Yeah.
And it was kind of difficult. Kind of difficult to time it correctly.
Your sound's breaking up a bit, mate. Your sound's breaking up. I don't know. It's got a bit robotic.
Really, how about right now?
That's a bit better.
Yeah, must be my connection. Okay, must be my connection. Yeah. So like I was saying, I was trying to time correctly that that pullback on the Nasdaq, right?
Yeah.
I saw this level to begin with, right? This big level that was where sellers were uh, stepping in,
Yeah.
honestly, and there were some big targets to the downside, some what I like to call a big Fibonacci cluster here. And after this candle, this 4-hour candle, it was pretty clear to me that this could be, in fact, be the level to jump in for a bullish continuation. And what I'm going to do on this one, I really want to hold on to it for at least a retest of these highs, right? If not to all-time high. Just because of that, equities are so strong at the moment in the US. I don't know what you think about that one.
Well, I've got a lot of thoughts on it, mate. To be honest, I was actually short the Nasdaq into the decline. And the reason that, and we took it live on the show, but I came out actually just where you entered the long, and I tried to flip my position and take a long where you entered long as well, but I got stopped out. So I think I was a day early on it. But I got the move down. My issue is that and the reason that I was short in the Nasdaq while all equities were going up, because I've still got a long bias on the FTSE. And some of the other equities as well, and S&P and Dow as well, long bias. But the reason that I was short on the Nasdaq was that my thesis was that while the Nasdaq really did very, very well, some of the tech stocks did very, very well with a lockdown. I thought the reverse may well happen if lockdowns lifted, and we did see the likes of Zoom, the likes of Netflix, and some of those guys actually get hampered
Yeah.
quite badly, by that. and the market did come down. Now, I've still got a long bias on the NASDAQ, but I just wonder whether we've got some further to come down. I mean, the valuations for the NASDAQ make it very twitchy, and I wonder whether, you know, and there's some stocks that I've got some orders in to go short on the FTSE as well. So I'm spreading around a little bit. I'm trying to sort of like get some of the stocks that did very well during the pandemic, and looking for them first. Yeah, I mean, as I say, the likes of Netflix is a really good example of that. I think Netflix may well suffer. You know, it's difficult to know whether people will just keep their subscription or not. But I think because the move has been so inflated in some of these things, then at least some reversal of that is probably likely. And
yeah, I agree with you on that one. And because I mean the moves have been so overinflated, and because why the moves were so overinflated too, because I mean really, stocks like Netflix and Zoom, they just started to rally way before they actually reported an increase in profitability and in earnings because of the pandemic. Now, because of, I mean, if you put all the same rationale, but to the other side, I mean, it would be very plausible that these stocks would suffer just because we are lifting off the restrictions on the coronavirus pandemic, right? It's pretty logical the way that you think about that, and that might be why the Nasdaq did not make all-time highs on that day that they announced the coronavirus vaccine, right, Pfizer.
Yeah, I think that was the case. I mean, the interesting thing is that there are obviously other stocks in the Nasdaq that are much bigger than the likes of Zoom and Netflix. And I think when it comes down to it, the Zoom and Netflix story itself was almost like a sentiment trade. You know, people sort of like with big sentiment that those guys are going to do really well. They start to buy stock in Zoom and Netflix. And you're absolutely right. You know, specifically Zoom, they hadn't really reported any earnings, so it was a punt for many people that they would actually, you know, get some decent earnings out of it. And there's no doubt they will. But what happens now? But the thing is that now the reason that I did close my position rather than, you know, sticking with it is that I also do agree with you, because even though we are coming potentially out of lockdown, it doesn't mean that all of a sudden the world goes back to absolute normal. So I still think that there's probably some room to run in some of these, and maybe we do actually need some fundamental data to say people are using Zoom less. You know, are we actually in a phase where people will continue to use Zoom because they'll actually still continue to travel less? You know, this I mean, some of the stocks in the FTSE, the Rolls Royce in a day was up 100%. Now,
really, I didn't, and I mean, I didn't look at the specific stocks of the FTSE on that rally.
It was crazy, man. And the thing with it is that not only. Oh, we're not on camera. There we go. Let me get on camera there. Not only it didn't finish there, but it rallied 100%. And the reason I point that out is that Rolls Royce is a blue chip stock. I mean, we're not talking about a penny stock. So penny stocks do that all the time. They're like cryptocurrencies, you know, in the way that they kind of rally and do their thing. But the likes of Rolls Royce just doesn't do that. So so for that to kind of like have the movement that it did have was quite astonishing. Now it has, as I say, it has retraced quite a lot now, and it was up and down, 100% up, 50% down within a day. So Rolls Royce has leveled off, but I'm interested in a potential long. But I think what might end up happening is as things settle down, is that maybe there's maybe some realization that, you know, maybe the world isn't going to change in a heartbeat back to where it was again. So there is still you know, some use for things that trade on the Nasdaq. The likes of Nvidia, I was surprised to see those guys sell off really off the back of it.
Really, me too, Rahan. That's something that I didn't understand. But again, when the big boys from the Nasdaq sells off, that carries on some bearish weight on the rest of the smaller stocks. But Nvidia is not that small, actually, right?
Well, this is it, and they were talking about maybe migration out of the Nasdaq and going into some of the smaller tech value stocks, like in the Russell 2000, which obviously did very, very well. Now, the reason that I think that the S&P did okay out of it is because it's got 500 stocks in it. So the ones that were outperforming the underperformers by quite a bit. So because they've got some of those value stocks in there, that managed to cover the downside that was coming from some of the tech names, whereas the Nasdaq doesn't have that protection. So I think the Nasdaq probably does continue to rally. I really like the Nasdaq. I'd really like to buy it, but I just don't see the value at this particular position. And looking at some of the valuations and some of the earnings, they're just a bit overblown. Some of the PE ratios are over 100, and it's just,
I know. But the Nasdaq has been like that, and the big stocks have been like that for years, mate. For years.
Yeah.
So, and you know what? Yesterday I was talking to a friend about exactly that. If this pump in stocks that we have seen so far, this overinflation in valuation of overall equities is going to suffer once we start to ease the rounds of quantitative easing, or what's going to be holding on to these poor valuations at this. I mean, the reality of these valuations at these levels of valuation, right?
Yeah.
But the thing is that, but for example, the FTSE, another thing that I think that helped us on that FTSE long was when the Bank of England announced an increase of 150 billion pounds, I think, on its asset purchasing program.
Yes, it did. You're absolutely right, and the Bank of England continues to support the economy. So the FTSE did benefit from that. And as I say, the likes of Rolls-Royce did very, very well because it's so exposed to the travel industry, making quite a lot of the engines for the planes. Then things like that just drag the FTSE a lot higher. And now I see a lot of buying now I see some stocks that I want to buy, but there's no buying opportunity because again they've overshot their price points. I'm still long in EasyJet, which is a travel stock, and there's a few other bits and pieces that I like, but I still think that the EasyJet and Rolls-Royce they probably do dip, and I think that they could probably maybe even dip relatively significantly to get us in to add to the position, because that's all I'm going to be doing here. I mean, I think if restrictions are being lifted and you've managed to pick in any of these stocks in at the low, then there's no suggestion that price is going to go back to that low. So for me right now, it's really can I add to positions that I did manage to grab, which is what I'm going to do, because I still think that there's room to run in the rally. And the Nasdaq, I suppose, the reason I'm avoiding it, I really like the Nasdaq, is the best indice by far if you want to go long. But the reason that I'm avoiding it at this stage is that I don't see the value. It's interesting the way that the FTSE 100, as one of the worst performing indices. In fact, we are the slowest growing economy in the G7 in the UK. And as one of the worst performing indices, it's amazing that has outperformed the Nasdaq, over the last week in the way that it has. And I think it may continue, but maybe the spread between the growth is going to start to diminish, because I think the Nasdaq's probably just got a little bit more downside to come. That's what I'm looking for anyway, but a little bit more downside to come before it really starts to go again. And that's the wave that I'm trying to get, really, is the one where it really starts to go again. I've got a feeling Orlando's connection might have got the better of him. So let me share charts instead and see let's see what I'm looking at here. There we go. So this is the FTSE 100 right now, and I'm looking for some downside FTSE. I want the FTSE lower, and I see, looking at some of the stocks in the FTSE 100, I do see those guys coming down a little bit. So I've just got a just let Orlando know. Yeah, so where's the question really with the FTSE, I think for all of us, is twofold. The first question is, do we want to play it? Do we want to take a position where we want to try and figure out a long and get into that position? Now, if that is the case, do we want to trade it short into that long position? So that's why, you know, that's why the question comes in as twofold. So the first thing is, where would we want to go long the FTSE? Where would I want to go long the FTSE? And this is where I just have to start drawing lines. So I'll take you through it. First thing I'm going to do is just draw this trend line from on the daily chart, but actually you could get this on the weekly chart. It's a weekly price break. So this is where technical analysis is going to be established with what we see as what's our worldview. My worldview still is that the FTSE 100 goes higher. How far down does it come is the question, because we could miss another big move to the upside if we don't get in, because there's every chance the FTSE goes back to its record high. It goes back to its high up here. Maybe not by the end of the year, but within the year, you know, I wouldn't be surprised at all to see the FTSE back up there. If the pandemic starts to calm down, people are more likely to start getting into the FTSE 100 companies, as long as Brexit doesn't destroy things too much, because it's value. You know, the FTSE has value down here, and the capex ratio of the FTSE is undervalued. So I like the FTSE. So where are we going to try and get in? Well, let's draw some other lines. So we've got this trend line coming down here. Now we've got to draw some horizontal levels. This is on a weekly chart for right now. This horizontal level here is looking a bit like resistance, a little bit like resistance. Now, on the daily, you can see that it has provided support. You know, this 6309 has provided support, but this could be a little bit of a false break to the upside and then down again. Just a little bit further. So I'm interested in this level, but I'm not interested in buying here, because I think that there's a long way between the trend line and the previous resistance point and this resistance point. In actual fact, it would equate to what would be 5%, pretty much. A 5% of that's a 5% move in the FTSE's 5% of its price beyond the two areas that would be of interest to me, beyond a potential support level, or previous resistance and this resistance. But there are resistance points on the way, you know, coming down. So we can see this one here, but that's a really strong one. And if it holds that area, there's no doubt the FTSE's going to take off to the next level. Now, where's the next one? Well, there's a little bit of a level here as well. You can see that this one looks pretty good too. So this is the one. Now, this one becomes a lot closer to the other one. Now, if the FTSE's particularly bullish, then it's much more likely to hold that position. Now, let's think about why this area may not be as low as we're going to come as well. And for this, I'm going to pull up some other potential support and resistance levels to help me ascertain whether this would be a decent price. And the first one I'll do is a fib. So let's pull up the fib. Now, there's nothing here in the fib area at all. From low to high, it's suggesting that the very first pullback area at 23.6% is still 2% lower than this point by price. Now, this one becomes a lot more interesting. So this now, it's only a range of around about 0.5% here, so 30 pips or so. This becomes interesting because it becomes like a buy zone. That's a buy zone there, all the way down to that point there. So this to me for right now is where I'd pick out the FTSE for a buy zone. So let's have a look if anything else is here. So we've got a horizontal level. We do have a trend line. It doesn't quite touch that trend line, so that's going to be of no use to ascertain that it's that level. And we do have a fib. So we've got a horizontal level and a fib congregating kind of around here. Now, we could switch that horizontal level down to that fib, and then it becomes even more interesting. Look at that point there. A little bit of a false break there. I'm going to get rid of this bottom one for now. A little bit of false point there. A point there. That looks like an area that was support, and it went through, tried to become resistance, but then it became support again. So there's a bounce around this area here. Bit of a messy kind of price action here, but it becomes definite resistance here, and yeah, again a little bit messy, but it becomes definite resistance in the end, and there's defined resistance there. So this area here looks like the best possible price. Now it doesn't mean that we don't get we don't continue to use this as a buy zone, because it may not come down to there, but this 60-50 I'm going to call it, and the reason I'm going to call it 60-50 is it's a round number ish, half a round number. 60-50 gets me to the analysis gets me to 60-50. Now that's a long way down. That's 300 pips. Do we want to play this down to this point here? In fact, I'll leave that as an open question. You guys that are in the room can have a think about that and let me know whether you think it should be a yes or a no. And when a couple of you have plumped in an opinion, I'll give you what I think. But that leads us down to that particular position. Now, what else is here? What else have we got? Have we got any fibs? Sorry, have we got any pivots here? Let's have a look. 60-50. Should have been doing this with pivots. Not right now. 60-50 is this area here. So not right now. So what I'd want to see, so because I'm out in front now, you know, I don't have to worry about this anymore. I've made my my choice, and I really like the potential for the FTSE to come down. I think it's got a good chance of doing that. Does it come down here? I don't know. What I want to see now is what happens to this and possibly even this over the course of the next few weeks. LT. Yes, I would. Yes, I would. I would sell to buy. My only issue is what's my catalyst. So that's going to bring me to my next parts of the analysis. What's the catalyst? There's a short on the FTSE right now that is tradable. But what's the catalyst to get us down here? And we'll have a look at that in one moment. Let me just tell you what this last little thing that I need to do. So because this is where my fib and my horizontal levels have got me to. What I need to see is confirmation that, or what I'd want to see is confirmation that I've got a fib also kind of moving inside that area. So I'd kind of want to see the fib, not the fib, sorry, the pivot stepping up, which is going to step up a long way here this week. It's going to step up a long way. Does it step up enough? Maybe so. If it steps up anywhere around this area, then this area does become a decent area of support. So that's what I'd quite like to do with the FTSE. Wait for the fib to step up, and if the fib steps up, sorry, wait for the pivot to step up, and if the pivot steps up, then I'll take the trade. Now we've got it's the 12th of November, so that's you know 2 weeks of fib is going to give us almost a month. 2 weeks of pivot is almost going to give us a month of a pivot as well. Where does this one end up? You know, if that ends up in that area as well, which depending on where this one ends up closing, then it also becomes an area of support. But then we're looking at that area of support in December. So that gives me a time frame to aim for as well. So that's my long idea. That's the basis for the long. Now let's talk about the short then. So could we take the short? Yes, we could. And actually there's a short right on the market now. We'll have a look at this in a similar way. We got a trend line going through here, quite probably. Yeah, that looks pretty good. Trend line going through there. We've got this head and shoulders pattern, which looks like it might not be old enough, but let's just check it out. We've got this head and shoulders pattern, which is slanting to the upside, but it doesn't look old enough to me. And the only way we're going to be able to know that, it might be just on the level. That's the left shoulder's range. Oops. There's the left shoulder's range. The right shoulder looks like it's only halfway done. So the timing doesn't look right for that particular pattern. Now, now that doesn't mean that it's not valid still, because if we see price action break down here, then you know there's a chance that we do come back, and then the shoulder will be old enough for us to be able to take. So it's only it's 1 o'clock in the afternoon here, an hour and a half before the US market opens up. So there's a chance that this does close down here in the next 5 minutes. I don't know. Would I look in the hour after that? It might be, yeah, it'd be a bit early for me. So what I'd want to see is this pattern, probably, because it'd be close enough to be able to trade this in the US session. So I'd want to see that pattern arrive in the US session if possible instead. Now, what was the other thing? Oh yeah, so catalyst. What's going to bring us down on the FTSE for a little while? Well, let's have a look at Forex Factory and see what we got. Is there a potential? We don't know if there's going to be, but is there a potential catalyst? And what have we got coming out? CPI from the States. Can CPI be a catalyst for a little bit of downside to start us off with? Yes, it can. So we might see just a little bit of downside today, but it doesn't look like a big move down. Unemployment claims, can that provide some downside? Yes, it can. And so, of course, CPI will be the same as the first one. Now, this one's a bit bigger. ECB President Lagarde speaking is a much more significant thing that could happen, that could change these markets around. And there's a few, actually. So what I'm looking for to start with is a potential easing into this speech. So a bit of a sell-off into this speech, and this speech. So the three of them are out. Now this is kind of like you know, aside from Bailey, President Lagarde and Jerome Powell are the big players when we think of the global economy. They're the big players in this market. Oh gosh, Orlando's having all sorts of trouble, I think. Don't worry, mate. If you can hear me, it's honestly not a problem at all. Don't worry. If you can get in for the last couple of minutes, great. If not, no big deal, mate. Not an issue. No worries, mate. No worries. We'll do it next week. I'm just sorry. I've just got a. All right, buddy. Have a good one. Not a problem, mate. Honestly. LT, that sounds awful. That sounds really bad. Okay, so that to me is the big news of the day. Now, can that drive the market? Yes, it can. So what I'm looking for really is a sell into these speeches, and then after the speeches, you know, that we might well find that the price action resumes again. So all I'm looking for now is if I can anticipate that there could be a sell into this into these speeches, I'm looking for a reason on the chart now to get in. So what I'm going to wait for is this bar. Let's see if this bar closes, but I need a close below. This is too shallow. Close below, probably down that point there. A close below, and then I'll start looking for the pullback. And if I can get that some sort of signal here on a shorter term time frame, then we can take the short, and we'll take the short probably, you know, looking at maybe these lows down here initially, and leave something on the table just in case there is a sell to buy. As you point out, LT, there might be a sell to buy. So what we can look for then is to split the trade up with the anticipation that we're probably going to get stopped out. So but we don't know. So that's the reason we're going to trade it. So we're going to try and go short here. We're going to try and go short here, in and around this area here. We're going to try and, if we put on one position, let's say of some description, whatever that is, 2 lots, 10 lots, we're going to count that as one position. If the market comes down to our target price here, we'll put stops at the highs here. Market comes down to the market price, we'll take half, and then we'll move the stops to break even. Oops, break even at that point. And then we'll see if the market does continue to come down. And if it does, we know what we're aiming for. And we will aim down to this area here-ish. And at that point, we will add the half. So that's the plan. What's likely to happen is the market will probably break down. It'll probably come up, give us an entry, we'll take half, and then it'll probably come back up and take out our stop. That's more likely to happen, but it's a bit of a trade that we can have as a freebie, so it's worth playing it. Right. Well, that's it. I think that's it. I think that we are all done. So I am going to close it up. I'm pretty sure this is a half-hour show, so I better close it up. I'll be back with Jeff in around about 10-15 minutes anyway, so I better close this one up, and I'll see you in 10. But thanks for popping in, guys, and thanks, LT, for your participation. Appreciate it, mate. All right. See you later.